Brent, can I pick up on that point? I'd like to go a little deeper on this issue of public versus private ownership, because I think this is one of the big trends of the last kind of decade or two, where private equity is owning more assets, where companies are going private, where there are perceived to be a lot of challenges related to being a publicly traded company. So I'd love to get, you've obviously seen many sides of this. What are your reflections on that? What do you think that means, for the economy?
I think that the public world just forces a fair amount of short-termism. Now, having said that, and we are as an insurance company, we have lots of float. We have a big balance sheet. We have a $30 billion balance sheet. We are big investors in private equity as both a limited partner as well as co-investors with them on any number of deals. It's not perfect. I actually, when we're looking to control invest, I love to recruit either the existing management or the founding families by saying, get off the treadmill, because the beauty of private equity is it's a longer window than that 90-day window, but it is a window because those funds are limited in term, and those investors, and I'm bipolar on this because as an LP, I want my IRR and I want my money back with a return, but that inherently means that you're trying to transform incredibly quickly so that you can trade again. And as a private equity investor, trading amongst themselves can sometimes hide a problem. Sometimes it makes sense to have it go from a middle market firm to, a Blackstone or a KKR that's a bulge bracket firm that can take them to the next level. So those growth-oriented changes make sense to me, but it can also encourage bad behavior. I got a dog in the portfolio. I'll take your dog if you take my dog.
Right.
So it's not a perfect world, but I do believe that the sense of urgency is very real. The transformative nature of what they're trying to do is very real. And in many respects, the public market would have a harder time consuming and understanding the long-term nature of that transformation that's taking place. I think so. In some respects, I think being public forces you to be a little more incremental, and it can be
incremental because you can't get the same short-term performance bump. If you're doing a transformation, you need some time for it to play out.
You need time, as well as how do you explain to the market?
Yep.
You've got to convince those analysts, and and then the Me Too nature of whoever your coverage cohort is. Everybody has to do all the things that cohort says that sector needs to have. So it homogenizes and almost punishes a differentiated strategy in some respects. And that's not a criticism on the coverage model, because I think it does a lot of good things and it holds management teams accountable. But it's clear that you can raise the capital in the private markets effectively, and that's evolved. I was personally involved at Alamo, and then at JM Family, they literally did the first lease securitization back in the 90s. And so you look at the maturity of those ABS markets. I mean, we go to market 6 to 8 times a year, and raise in any given year, kind of $6 to $10 billion. Supported by great Toyotas and great Toyota customers, whether it be a retail installment contract or a lease. So no limitation there. We have a who's who, bank group that is always hopeful that we'll have more needs, and we're and we know that they're there if we need them to be.